Hey, how's it going? Hopefully everybody is enjoying their weekend. It's Sunday. Everyone's weekend's almost over. That's all good though. So we're back here. It's another week, and wow, it's been a week. Let's just say it. So uh, this is the newest episode of the Financial Mirror, and as I've stated on previous streams, it's very important to me to stay relevant, not only in the strategies that are presented here on the stream, but more importantly on the data that is discussed. So this is going to be one of those weeks, right? So we have we've gotten to a point in from an economy based perspective where inflation is becoming a hot topic, right? So this is an episode that's just for you, especially if inflation is confusing to you, or you're just like, well, obviously inflation's when it goes up and deflation's when it goes down. So if that's your context around inflation and what that is, this episode's for you. But more importantly, I'm going to go over a couple of things that you can take away that may just be that piece of information that you need to hear that can put you right back to where you get a little bit of peace of mind about what you can do in this time. So the great part about it is that none of this is intended to scare you, because this shouldn't be where we're at right now is not so much of a scare point. I don't think anyone should be scared yet. We're not at that point, but it is something you should be aware of. It's something that you should be looking at, something that you should be in tune to. It shouldn't be just something that is just in passing, right? But just to give you a background of sort of where I came up with this episode of why I wanted to talk about it, mostly comes back to, this last week, the report came out and it showed that the consumer price index had rose to 4.2%, right? So to me, that stands out. That number, it stands out to me, but to an everyday American, most likely, that doesn't really keep up with financial terms, all you hear is 4.2%, and that could make you feel a multitude of ways, right? So I wanted to give this episode a chance to sort of break down what that actually means. Like what does consumer price rising to 4.2% actually mean? But also to sort of come up with give you a baseline knowledge of what inflation is, how that data can make you begin to set an expectation. I want to give you some of those things of what you can expect, and then finally at the end, I'm gonna touch on a couple of things that you can do to sort of hedge yourself against inflation. Nothing does away with the actual inflation for what it is, but mostly just focusing on things that you can do for yourself, right? Because you're not going to stop inflation single-handedly, otherwise somebody would. But I want to give you that. I want to give you that little bit of what you can do, right? So that's sort of how I want to break this week's episode down. I believe that walking through it in that manner, that sort of progressive manner in each little section, can help build all of what all this inflation stuff is about. So you're going to hear a ton of stuff. The news is sort of full of inflation information right now. You get that inflation information. Sorry, I thought I was a rapper for just a second, but it's all good. I think that inflation will be a hot topic for probably the next little bit of time. But without further ado, we will get into it. So with inflation. So what is inflation, right? So I'm going to start off by saying that if you did a quick Google search of inflation, of what that actually means, I'm sure that you'll look that term up. You just typed in inflation or inflation, economics or whatever. 10 sources would give you 10 definitions, and that's just the way it is. And it's not that it's complicated that you get all these definitions, just that people perceive it in different ways, right? And so the easiest way, and I'm going to sum it up in 5 simple words. The easiest way to think about inflation is it's a change in the price of everything. Change in price of everything. It's 5 words. Change in price of everything. So everything that changes prices is inflation, right? So technically I could stop here, right? Like, I mean, you've got it. Like, you know what inflation is. You're already smarter than the average American right there. So seriously though, the definition talks about the price of the good. So change in the price of everything is sort of the change in the price of the good. So that's one way of looking at it is when the price of the good itself changes. Like I bought an iPhone and the price of the iPhone went up, you know, the price of that good price went up, right? But you can also look at it from a sense of more like a personal look at inflation, right? And that's where you look at the value of the dollar, right? So it is sort of the change in purchasing power. So if you had $100, your $100 may not be able to buy you as much as it once could have, right? So if you like, for instance, like I'm sure everyone has, you know, a parent or a grandparent or whoever is like, back when I was a kid, I used to get a Coke for 25 cents. So that's that every person has that story that they've heard, right? Or I mean, maybe in this generation, maybe where we're at now, maybe that's what I heard is I used to get a Coke for a nickel or a quarter, but maybe now it's like we're at the point now where, yeah, back when I was a kid, Coke used to cost 75 cents or $1 or whatever. Like that's the inflation part of it, right? So you can't buy. First off, you can look at it from the first standpoint that I talked about, where the price of the good, the Coca-Cola or soft drink or whatever, has gone up in price. Or you could just look at it, well, my quarter or my nickel just can't get me as much. Now I can only get a thing of bubble gum for 25 cents, where I used to buy a whole Coke for 25 cents, right? So it depends on how you want to look at it. Both ways are right. That's why I'm saying, like, if you look up inflation is a common term with an unreasonable amount of definitions that are tied to it. Okay. So in reality, I tell people, no matter, you know, either way, you're right. So you can think of it as the change in the price of the good, or you can change the price and the value of your dollars. But either way, they're essentially the same thing. Okay. So what needs to be understood though is that throughout all of this, I want to put this out up front, that as I talk about inflation and how you can fight off inflation, I want you to know that some inflation is good. Some inflation shows a very healthy economy. Some inflation shows, you know, that when prices are slowly rising, it shows that there's still a demand, right? People are still buying it, because if the prices stopped rising, there would be a loss of demand, right? People may, until it gets to a certain price, and we'll go over all that, but by prices slowly rising, you can see that there's still a demand. This is going to keep people buying, right? This creates jobs, because when there's a demand for the good or the service, people are employed because they need to provide the goods and the services. So that creates the jobs for the products and services that are being produced, and it keeps everything just moving in a positive direction. That's that good, healthy amount of inflation, which the Federal Reserve keeps at about 2%. People say, you know, Federal Reserve says 2% of a steady inflation is good. Like, that's just a good amount to have. So now let's look at what about when, so the title of this is Fighting Off Inflation, but let's first establish the definition of what is deflation. So you'll hear that deflation, what sets in, and you know, when deflation sets in and everything starts to move lower, what about that? Well, if you can imagine with me for just a second, imagine with me that this is where it becomes a problem, because as everything sort of deflates, the economy sort of deflates, it creates this excess of goods and services. So not as many people are you know, as in demand to get these goods and services, and this can lead to consumers, like I said, just sitting back and possibly just waiting on lower prices because everything's coming down in price. So why go out and buy it today when I might go wait next week and save, $100 or whatever, So this would technically, because of this, it would delay the economy from course correcting because people are just sitting on their hands, not spending the money, because people have to spend money to keep the economy healthy, right? So some of the outcomes of deflation can be higher unemployment due to prices dropping. As prices are dropping, companies are making less money and they're laying off employees because they can't afford them, right? Debt, interest rates go up. This makes debt more expensive to have. And for people that use debt as sort of a buying power, right? They leverage debt to make money. That keeps them from doing that, and that could lead to more unemployment for people in those industries. And this can ultimately lead to this. I mean, it's like this death spiral of deflation because it just spirals out of control. Lower prices lead to less demand. That leads to less production. That leads to lower pay. That leads to more lower prices. That means to less demand. That means to less production. And it just keeps going and going and going and going and going. And you're just spiraling this deflation out of whack, right? So up until a certain point, and then people will be like, okay, I'm ready to start buying again. I'm ready to get back out there. And that can sort of help sort of pick the economy back up and start moving it back into a positive direction or course correcting the economy. So what about when inflation moves too high, which is what we're looking at right now? We're looking at an inflation that's moving higher. The inflation, the 4.2% that came out is the highest that we've seen in 13 years. So we're moving into a higher inflation. Once again, I started this off by saying this isn't something that you should be scared of. This is just something that this could easily be, and I'll talk about this in a little bit, but there's a multitude of reasons why this inflation could be going higher. Some were sort of known, and then others are more perceived reasons. But when inflation kicks in, just to hit this up so we can move on to the next part, when inflation kicks in, it can be as big of a problem as the deflation. So all those things, the higher unemployment, the debt, the spiraling out of control, all of that same kind of stuff can happen with inflation. The first thing that happens with inflation is that you can't buy as much as you once could. And this is looked at as a decrease in your purchasing power. So what I used to go and buy a gallon of milk for $3, now a gallon of milk may cost me $4.50. So my ability to buy whatever has limited me, right? If I didn't get a raise and inflation continues to go up and I don't get a raise, I can't buy as much. Like I'm looking at my budget, I'm like, holy cow, I don't have enough money. I used to have enough to barely scrape by. Now I don't have enough. Well, obviously inflation plays a role in that because what you once could do with $100, you can no longer do with $100. Easiest ways to look at inflation. Okay. So inflation leads also to more unnecessary spending, because this could be sort of the toilet paper bonanza, or recently the just keeping this relevant, the East Coast gas pipeline inflation, or a offset of inflation leads to more unnecessary spending, and that could be, like I said, filling your pantry with unnecessary toilet paper, you're filling your gas tank, and those were just little bits of little pieces of things that show a little imbalance of the economy. But it leads to, like, this leads to an outcome of more inflation, because since demand is like falsely driving up the cost, right? Inflation is raising with a dollar that's worth less. So when we saw a lot of those gas prices when the ransomware hit the Colonial Pipeline Company, what we saw is that gas stations, because of the increased demand, were increasing their costs, right? They don't have as much to go around. Huge demand, and it was for a reason, but that sort of caused this like false inflation type of thing, right? So inflation plays a part of all walks of life. So if you play in the stock market, inflation affects you, and that that's a if you don't play in the stock market, then you get the trade-off, because there are people that are playing in the stock market, and there's companies that are banking on that type of investor relationship to make money. So inflation can scare investors and lead to sell-offs, which leads to people taking profits, which leads to more selling in the markets. Like you have this inflation affects all parts of the economy, and I can't say that enough. It's just something that you have to be aware of. Just don't let it scare you. Don't let it scare you until a certain point. So the last thing I want to go to before I get into what you can expect with this information that came out is this thing called stagflation. And this is where stagflation is where inflation is going up and simultaneously unemployment is going up. And this is another part of inflation. And this is inflation's with it going up and unemployment going up, that can lead to huge problems, because there's this huge demand setting in, inflation's kicking off, prices of things are going up, and people can't afford them, right? So it's this terrible spiral that would happen with that. And that we may see that coming. There's no telling. We don't know, but there's a chance that stagflation could kick in. But with all this information, you can see that inflation is very much necessary for a very healthy economy. However, the biggest piece of it is, like everything else, it's in moderation. So in moderation is good. And when inflation's overdone in either direction, up or down, it can create problems. So what does this mean for you? Well, biggest thing is consumer price index rose 4.2% on the year. So hopefully after everything I just talked about, you can see how significant that is. And yeah, I said it and I'll say it again. This is the highest it's been in 13 years. So inflation is good. Once again, inflation is great, but this quick increase in inflation like this could lead to problems. So what does that mean? 4.2%. What does that mean? Well, if you look at it from the cost of goods increasing perspective, if that's how you look at inflation, like, the price of my Coke has gone from 25 cents to $1. If you look at it from that perspective, that means that everything is 4.2% more expensive than it was in April of 2020. Because like I said, this is just over the year, right? So year to year, 2020 April to 2021 April. So it's 4.2% more expensive. So what you could buy for $1,000 in April of 2020 now costs you $1,042 today. Okay? Hopefully that makes sense. So if you look at it from a purchasing power perspective, it means that your money is worth 4.2% less than your money was worth in April of 2020. So just to break that out, the paycheck that you received in April of 2020 last year is now only worth about $1,916. So you've lost just due to inflation, your money is worth less than it was last year. So now, stated before, Federal Reserve maintains a target of about 2% inflation, and that's what they consider a healthy amount of inflation. So I have to tell you that the 4.2% is not, so what the consumer price index is, which is what that number is from, is that of all these sectors or all these industries, on average, their prices of their goods and services went up 4.2%. This is, the basic consumer things like you have, cars, you have food, you have airlines, you have gasoline, you have all of these things, all of these industries, all of these sectors, one may have gone up 1%, one may have gone up 10%, and then when you average these things together, you're at about 5%, right? So it's with a grain of salt, right? Because some industries and sectors didn't go up 4.2%, and some went up more than 4.2%, but this is just an average. So I have to tell you that there's a couple of different things that play into this. So first off, the simple fact of prices increasing, it can easily be tied back to COVID in the sense that people are getting back to their lives. COVID's, life's back to normal. COVID's pretty much over at this point. People are getting back out. People are spending their money. That demand is going to lead to higher prices. You can go see it. Rental cars are more expensive right now. Your travel is, if you look at the price of last year's travel, it is much less than what price is, today for you to buy an airline ticket. So it was known. It's like we knew that this was going to happen. We knew this whole thing was going to happen. And that's the part that I want to continue to drive home. So Americans are just getting back to their lives. They're spending money on things that they used to enjoy, their activities, their travel, etc. And as I discussed before, inflation, with people wanting to do more and in essence, spend more, could lead to more inflation as companies work to keep up with that kind of demand. So it just depends on, what happens here going forward, and we'll see what happens with the economy. But inflation was to be expected. The thing that you can expect right now is just more volatility. You can expect more volatility as investors and traders are sort of indecisive on how they're going to navigate the markets. This can lead you some good days and some bad days. You're going to see huge swings in your investment accounts. Some days will be really bad. Some days will probably be really good. The other thing that you can expect right now is you can expect to see prices continue to increase. Some will say it's a supply issue where people want stuff but they just can't get it. And others are going to say that it's a demand issue where people they've been given so much money from, stimulus and whatnot that their demand with all this extra money, their demand is driving the inflation. Either narrative you go with, whether it's a supply or demand issue, it's important to see that we want to see if this is going to course correct. We want to see if this is going to correct itself, because the last thing that you want to see is for this to not course correct and this get out of control. Okay. And then the last thing that you should be watching right now is how does this consumer price index rise into 4.2%? How does this tie to the unemployment rates? Are those going to increase? Are they going to decrease? Because that ties back to that stagflation, and that's something that we should be watching. Once again, don't panic. It's not worth panicking, but it is worth watching. So we'll see what happens. Nobody's a fortune teller. Nobody can predict the future, but it's worth just sitting back, watching, and keeping up with. So what can you do? The biggest thing that you can do right now is 4 letters. Wait. Just wait. So I'm not a financial advisor. Nothing I say here can be used as financial advice or should be used as financial advice. This is simply just education. So don't take anything that I say as the financial advice you need to go make your $1 million on the next GME. But what I'm saying is take this as education and ensure that you have the most up-to-date knowledge and talk to a financial advisor before making any financial decisions. So the thing you can do is utilize the different vehicles that have been provided to sort of hedge against inflation. So one of the biggest ways that people hedge their money against inflation is stocks. Now, you probably, and if you've listened to any of my episodes, you probably don't invest directly into stocks. And that's because I personally recommend everyone to, unless you are very knowledgeable of stocks, you've been trading stocks, you've educated yourself on stocks in whatever format that you found education in stocks. I don't just recommend it broad strokes because people can really get themselves in trouble in stocks. So if you're but even though you don't directly buy into stocks, your mutual funds and your IRA and your 401k and your brokerage accounts or everywhere else, those mutual funds are based off of stocks and bonds. Therefore, you are sort of, I'm not going to say you're hedged against inflation, but I mean, that is your method of hedging against inflation. Will the stocks tank? Possibly. Who knows? No one knows what the market's going to do, but that is a way to hedge yourself against inflation, is by being in the market. Because understand this, when markets pull back, they normally recover even stronger. Go back and look at how COVID happened. Go back and look at last year's numbers. You can see that a majority of our market has gotten back to and better than what it was when COVID happened. Markets correct. Markets do pick up. So therefore, you only lose money if you sell your positions in your retirement accounts, in your brokerage accounts. That's when you're losing money. So if I've gone over it before, but dollar cost averaging, I've got a video on dollar cost averaging, and that's your friend in a time like where inflation and markets are not really you're not really sure what's going to happen with the market. Dollar cost averaging an account is what that account was built for. Like, I mean, it is to help you weather the storm, and weathering the storm in this instance is important. So you've got to continue to invest. You have to continue to put your money into that account, that investment account. And that's one way that you can hedge yourself against inflation. So go back and watch. I'll put a link in the description. Go back and watch dollar cost averaging, my video on that, and how you can build wealth through dollar cost averaging. But that's your friend. So understanding that stocks can hedge you against inflation is one major point. Second thing is gold. Investing in gold is, if you Google hedge myself against inflation, if you Google how to hedge against inflation, like if you Google anything like that, there's a good chance that the number one thing that people are going to tell you to do is to invest in gold, because historically it has done quite well, about a 7% return. So even at a 4.2% inflation, 7% return, you're still beating inflation in that sense. So they do have their setbacks. Gold does have its setbacks, but the biggest thing is that they have historically shown great success. So gold is another one that you can invest in. They can sort of hedge your money against inflation. Another are TIPS, which are Treasury inflation protected securities. This is a very safe investment. Normally speaking, it does not keep up with the inflation rate, per se, but it does help you from losing as much purchase power of your money with a better return than like a savings account. So, like I said, it doesn't return the actual rate of inflation, but it can help lower that amount that you would possibly or potentially lose due to inflation. And then lastly is to help hedge yourself against inflation is real estate. So buying houses with a mortgage is a huge hedge against inflation, because think about it. If I bought my home at a 2% interest rate, right, like 15 years ago, that 2% interest rate stays 2% for, I literally get to lock in 2% for, if I do a fixed rate mortgage, I get to lock that in for literally 3 decades, 30 years. I do a 30-year mortgage. So locking in that rate hedges that money against inflation, because it's locked in at 2% or whatever for 30 years. And your home naturally has the ability, I'm not going to say it does, but it has the ability to appreciate. So the appreciation of a home most homes average an appreciation rate of about 1% to 2%. So in addition to locking in that interest rate on your mortgage and hedging your money through a mortgage against inflation, your appreciation of your home also is helping to grow that. So if this all ties into how your money, the biggest thing you can do is to not, let your money just sit in a box under your bed. Like that's the worst thing that you can do. Even sitting in a savings account. So The other thing I want to touch on this, in all of my notes, I didn't write this down, but I want to touch on it because I just thought of it. Do not let a 0.5 or 0.4 or 0.3 or whatever percent interest rate savings account push you away from not having money in a savings account. Your emergency fund should be an easily accessible fund. You should not put your emergency fund in a brokerage account, please. And I say that to say this: if for whatever reason, the stock market tanks and all of your money, all of your emergency fund money was in a brokerage account and it tanks with the market in a mutual fund, your emergency fund is now no longer even close to what it is. And now what I'm telling you is that yes, your money will probably course correct and it will be more than it was. But what if in that year you needed that emergency fund? You needed money out of that emergency fund. It's not there. So I say that to say, don't let a point with all this inflation talk, don't let a 0.3 or 0.5, I don't even know what the average rate is right now, probably like 0.5% on a savings account, maybe 0.4% on a savings account. Don't let that push you or scare you away from keeping your emergency fund in that savings account, because you don't want to lose your emergency fund due to a market, a transition of the market, or volatility of the market and whatnot. So it's important that I touch that piece. So if you're at a retirement year right now and we're talking about inflation being a thing, I do want to tell you, speak to a financial advisor on your best route forward, as everyone's situation is different. It's important that you do what's best for your situation. Maybe there's, I'm not even going over examples. I don't want to give anyone any ideas, but it's important to know that your situation has what you do in your situation has to be tied back to you. So it's important to know that, because I don't want you to be in a bad position as we talk about this whole inflation thing. So inflation is here. We see it happening. This was the first sign that inflation is occurring, right? The cause, like I said, I'll leave it up to you to determine. All I can say is COVID. COVID did it. And that's not even being facetious. That's actually being, whether it's a supply or demand issue, both were caused by COVID. So we'll leave it at that. But what I can tell you is inflation is going to affect you in some way. And that's the part that I really want to touch on. I want to make sure that you understand today, is that in some way inflation will affect you. So not telling you to lose sleep over it, but what I am telling you is that the cost of goods and your ability to have a higher purchase power, that definitely affects you. And that affects you from the ability to pay down your debt. That affects you from your ability to build wealth. That affects you for how much you can spend your actual paycheck on, how much of that money, how much is it actually worth? All of these things, like, it's going to affect you. Inflation affects you, and you should really keep an eye on how it's going to affect you. Okay. So it is a big deal. And I think that's the part that I want to touch on and really hit home to, is that I know that some are going to downplay it. Some are going to say, oh, it's not that big of a thing, but it truly is. And it has a lasting impact as you move through life, as you continue to try to put your life together in terms of wealth building, debt, paying off debt, like all of these things that are happening, it will affect you in some way. So don't downplay it. Don't downplay it by any means, because it does. It affects everyone. It doesn't matter if you make $500,000, $100,000, or $10,000 a year. Like, it will affect you. So don't fall into the trap where spending more money will fix your problems, because it's not true. It's not true for anyone. Like, spending more money is not going to fix problems. You will eventually create so much inflation, and it'll bring in some of those problems we discussed: unemployment, It'll bring in higher interest rates. It'll bring in all of these things and the higher interest rates and the higher cost of goods and lowering your purchase power and all that kind of stuff. Like all of this is tied into how inflation is going to affect you. So that's all I can say. Don't think that anyone spending more money is going to fix anyone's problem. It doesn't happen. Right now in this time, if you're noticing that you are a little tighter with money, that's to be expected. You're going to have to tighten down your budget. You're really going to have to focus in, get laser vision, because you can see the price of goods and services are going up as we speak. So tighten the budget, trim the fat off the budget, make sure that you're living within your means, because if for any reason anything that you have that is increasing in cost, we've got to still be able to do those two important things: pay down debt if you have debt, and start to build wealth and start to create a future for yourself. So I hope this has given you the knowledge you need to help you understand sort of what inflation is, and ultimately really just give you what to expect and what you can do about it to hedge yourself against it. So in terms of affecting inflation, you're not going to be able to totally control it by yourself. You're not going to be able to stop it by yourself, but you do have the ability to educate yourself to what you can expect and what you can do. And that's what I want to leave you with. As always, if you are in need of a financial coach, I'm here to help you. So go to thefinancialmirror.org/contact and send me a message to connect with me, and we will absolutely get that ball rolling and get you set up and get you headed where you want to be. So just want to thank everyone for tuning in. As always, share this with a friend. If you have someone that really could use this, share that with a friend. Let them know that there's some good information out there. Check out my channel, Financial Mirror. It's on YouTube, it's on Facebook, and at my website, thefinancialmirror.org. Share any of those sites with any of your friends and family. And once again, thank you for tuning in. I'll see you next week. Peace.